Let's jump back in. Did want to talk to a question that someone brought up that I think is worth bringing up to everyone. As you think of how I'm budgeting, in this handout, right, Dave's got all sorts of different categories. I don't know, there's probably 10 top-level categories, and each of them has a few different ones underneath. It's really up to you, as you're constructing your budget, how many different categories do you want to break it down into? If you're really trying to control your expenses, understand everything, it may be helpful to have a lot of different categories. But particularly as you get more of a feel for this, you can start to group things together and just kind of have less categories. It makes it a little easier to manage. If you want to start grouping housing includes utilities, that's fine. It's whatever works for you. So just don't be intimidated, I guess, by all the different line items. It's kind of up to you what level you want to do your budgeting at. So as you do your budget, and particularly as you start doing this in the next month, kind of look back. What did I forget about? Did I forget about my car insurance bill? Did I forget that I have to have money for childcare sometimes? And just add and update as you go. So some things to think about, and then I'll open this up for some questions too. But in using your budget, add it all up right at the end. Take that, your income minus your expenses, and where are you at? So really, in your budgeting, you want to be budgeting right in the positive, right? You need at least to break even or have money left over at the end of each month. If you're in the negative, so if you budget and it just doesn't solve, what do you do? So the first question there is this a temporary negative, right? Is this a negative because my car broke down this month, and I don't think it's going to do that again next month, or at least I surely hope it doesn't? Or is it a negative because my lifestyle just isn't, I'm not living within my means. My lifestyle isn't fitting there. If you're in that point, these discretionary or wants are usually the easiest to cut back. So you start to ask things like, do I really need to buy new clothes? Can I get by with goodwill? Do I really need to go out to eat? Can I make myself sandwiches? Those kind of questions there. If that still doesn't fix it, that's when the hard conversations really need to start happening. That's probably at that point where you want to start talking with your MC, with someone you trust, with me on the finance team, with a close friend of so what can I do? Because then you start to get into more harder changes, thinking about, do we need to look at a second source of income? Do we need to look at a second job? Do we need to think about, is this the place I'm renting not within my budget? Those changes are harder to make. Hopefully you're not in a situation where you need to have that, but if you can't get there, if you can't get it to solve, those are the conversations that need to happen, because putting it off isn't going to help either. Things like generally we don't just win the lottery, right? Things don't magically get better. So though there may have to be hard conversations, it's better to have those sooner rather than later, or things will keep getting worse, like when we start talking about debt a little later here. You can also think about, if you're just a little off, a strategy of I'm going to cut back $50 a month. It kind of gives you something to aim for, something to look for. Each month, I'm going to just trim a little bit out. Can be a strategy to deal with that. On the other side of this, and I don't know if we've got anyone here on this side of it, but this would probably be more where my grandfather was at. If you have a big positive number at the end of each month where you're accumulating a lot, really, there I think you need to start asking yourself, well, what am I trusting in? Am I really trusting in God, or am I trusting in money for security? Am I accumulating that much because I want things that are unreasonable, or I feel like there's so many risks involved that I have to save up, and I'm not trusting in God and not being generous with my money. The other question, and Sam was really talking about this in his introduction, of where your money is, so is your heart. So your budget is a way also to do some really gospel reflection on yourself and say, here's a big tool that God has given us for His glory in finances, in money that we can use to glorify Him. Am I doing that? Where is my money going? What does that say about the desires in my heart? For some of us, right, it can really put it out there of where is my heart when I see where all of that money is actually going. So those are some things to think about as you review your budget. And right, it's about understanding your financial situation. You may see areas you saved in, right? As you do this, you might see, I've still got that, you pick it, that Netflix subscription that I don't use anymore. I'm all doing Disney Plus now because of kids or something like that. You may see things where it's like, oh, I forgot about that. I can save back there. Your budget is also a forward-looking tool. I think this is something that maybe doesn't get talked about enough when we talk about budgeting, but your budget also lets you look at the future and say, all right, so we're thinking of buying this house. If I buy this house, my mortgage payment would be this. Probably need to plan on some home improvements. What would that do to my budget? Do I have money now, or what would I need to cut back? New addition to the family, right? Kids are expensive, as I have definitely learned. So where's all that money for diapers and baby food going to come from? How would, if I need a different car, like what car can I afford? What makes sense in my budget? Your budget lets you evaluate those decisions going forward to make sure I'm thinking ahead of time. I know I can afford to do this before I actually go out and commit myself or spend my money. So with that, that's really the overview of budgeting. It's not a complicated idea. The challenge is in doing it. So I want to open it up for budget questions, then we'll talk about debt and savings after that. Any questions, comments from the group? Don't see anyone sleeping, so hopefully I didn't put you all out, but yeah.
Do you have any suggestions for okay, you and your spouse don't agree on how the money should be spent, hypothetically?
Yep.
Do you have any suggestions or tips on how navigate conversations like that so there's that united front as far as how we're going to spend our money? Do you have any strategies to deal with?
Yeah, so question, I know we're doing the video here. The question was if you and your spouse aren't aligned on where money should go, what your budget should look like. So there, I would first take a step back and ask, are we aligned on what our life's priorities are, what life should look like? Because the budget should reflect that. So are you aligned on what level of housing is important for your family? What's important for your kids' education? Those kind of questions. And then that can flow into your budget. If you're aligned there and your budget's not matching up, I would start to pull other people in, really, is where I would go. You can talk through it more. It's always good to talk through things, but really, part of the gospel message is we have a lot of issues in our own hearts with sin, and those can be hard to see. So starting to pull people in can be just one trusted person, can be a person from MC, something like that, to say, we're really struggling with this decision. What's your wisdom? Is there something we need to work on and think through there? So that would be my recommendation. Otherwise, I don't really have any specific talking points on between two spouses. So.
Even I was just thinking so there's that hard stuff that's
Mm-hmm.
important. So that's the discussion. Sometimes it might just be okay, we got $250 floating around in our discretionary budget.
Yeah.
You get 50, I get 50. That's your 50.
Yeah.
And
yep.
from there, we've got, and even I've even heard you and Brent talk about this before,
Yeah.
when it comes to a larger purchase, just saying, hey, okay, you're free to use that money however you want, but if it goes over this threshold,
Yeah.
it has to become a family decision, not just
Right.
run and take it.
Well, yeah, that's a good point, Sam. I didn't talk about that. That's something my wife and I do. That's something I do think is helpful. Is I have a set amount each month. My wife does each month, and that's ours. Like whatever you want to do. My wife wants to go out and get quilting supplies because she loves to quilt. I want to go buy a video game. Like that. That's our money. It's our fun money. You guys can set whatever makes sense there in your budget. But it is important in marriage to still have money that's yours to do your own thing with. You have to agree on that, and I think it's important that it's equitable. Like Sam also talked about, if we have money left over, what should we spend it on? What's the pros and cons, the cost and benefits to that? Should we do a new couch, or should we do a new grill? And you kind of work through that, talk about it, weigh the trade-offs there. So, yeah. Any other questions or comments on budgeting? So, yeah, go ahead.
We have been dating for 5 years,
Mm-hmm.
so we're still young.
Sure.
Does anybody in the room have any advice as to saving and budgeting? We're both 21, so we're
Sure.
22, but we're wanting to start off on the right track
Mm-hmm.
instead of on the wrong track because we want everything else in our lives to
Yeah.
go smoothly.
Yeah. No, this is the time to start, right? Yeah, I think you're asking the right questions there. That's the good starting point. As we see a lot of people in that age kind of work themselves into some difficulties with debt. I don't know. Specific advice? Anyone else want to jump in? Thoughts?
You're not married yet, so you have individual income, so both of you individually can try and stay on track. So you could very
Mm-hmm. Yeah.
And you'll talk more.
I'll talk more about savings and investing a little later. I would encourage you to start saving as you think of a family or a house. Things like that take a long time to save up for. Now's the time to start building towards that too. So, yeah. So,
What,
yeah.
I like when you were talking about forward orientation.
Mm-hmm.
So there's got to be the short term. I'm anticipating these certain things to happen, whether it's a new car or whatever it might be.
Mm-hmm.
But even for people who are at the phase, or just looking ahead to the next season of life, whether that's 3 years from now,
Yeah.
5 years from now, do you have any what sort of markers should we be looking for, or how can we, or maybe you have a resource or something, idea for wherever anybody's at, the season ahead, how can we anticipate that? Do you have any
Yeah, so kind of looking ahead. So I don't have it in here. I forget where it's from. I think it's Kiplinger, their personal finance magazine. If you search for it, I think it's called Money Moves, and then it's by decade in life. So you can say money moves in the 30s, money moves in the 40s, and there I'll have to check. I can try and send it out later. I think it's Kiplinger has it, and they talk just about in each decade of life, what are your priorities? What should you be looking for? What are some marks that you're on the right track? So there, it can help kind of break that down. And then you can also even look I'm in my 30s now, what should I be looking to in my 40s to kind of start anticipating there? If you're looking ahead, so what are big things if I'm now looking ahead to the next stage of life? So if you're single, right, what we talked about, or dating, it's to start thinking about, what are my priorities for a family? How would I manage money together with someone and not on my own? And then to start building that savings, that emergency fund for what's likely in your future, right? Most likely there's going to be a house at some point, there's going to be kids, and there's going to be life changes that go with that. So preparing for that and building that discipline when you're early in life, right? It's always easier to not form bad habits than to recover from them. So early in life, it's easy to fall into, when you don't have financial obligations, just spending your money as you go. And it's hard to recover from that when you want to start a family. If you look maybe more, I've got a younger family, what should I be looking to next? Then we start talking about making sure we are planning for retirement. We'll talk a little bit about that later. Retirement is really something that does take decades to save for. It's important that you're doing that earlier. We also talk about saving for education for children, if you have children. What that looks like, what are you willing to pay for versus them? That's a very individual conversation of what makes sense, but kind of early on, you want to start thinking about, am I committing to paying for a college education for my kids? Because that's going to be a real hurdle to save up for with the expense of college. Or is it a joint venture? Are they on their own? To start thinking about that. If you're getting closer, right, kids are moving out, and closer to retirement, that's the time to really put the polish on that retirement plan. When are we thinking about what does retirement even look like? We won't really talk about that a lot here, but I do think Christian theology has a lot to say about what retirement should look like. Just a blurb, but I don't think there's a place for some of the American notion of retirement is purely leisure, where I'm just at the golf course all day, every day. Retirement, Dave Ramsey, he phrases it rehirement. It's finding meaningful things to do in life, caring for children, volunteering, a different career, meaningful and important things that also serve God as well. But now you're not constrained by needing income. So that's a blessing to not be able to do that. But it's not a time just to withdraw into yourself, basically. And then retirement, if you're in that stage, there's a whole nother thing of discussion there of how are we planning for longevity and how are we thinking about passing on any wealth that you have built up to the next generation or to causes you care about. So real brief overview there, but some different things to think about. Was there another question somewhere over here too, Terry? Yeah.
Years ago, I racked up a little bill on credit cards, just buying gas
Mm-hmm.
and everything. Like you were saying, I didn't think about, I'll just swipe my card. And we went through the Dave Ramsey program.
Mm-hmm.
My wife Pam put the envelope with cash for gas, put the switch, kept that in my glove compartment. And it really helped a lot.
Yeah.
It really made me equate what I was doing with spending money, and
Mm-hmm.
in no time, we took care of the expense and had control. And I would
Good.
highly recommend that if somebody has got that problem. I didn't even think about it. I would swipe the card,
Yeah.
moving, but when you're actually paying that cash, you're thinking twice about it.
Right.
It made a big difference in our life.
It does really help. So with that is a good thing to mention. I did bring a few books that I've found helpful in personal finance here. You're welcome to come up after this. Just take a look, flip through, see if there's something interesting. Dave Ramsey's main book, Total Money Makeover, that we've referenced a few times. This is a focus on the family book on faith-based finances. You're welcome to flip through, see if that's interesting. The Clash of Cultures, this is more on investment, specifically on investment versus speculation. So maybe a different topic for some of you. We'll talk a little bit more about investing here soon. But welcome after this. Come up, take a look, flip through, see if there's something you're interested in there. Yeah, Sam.
Do you have any encouragement? Okay, so for me, looking at
Mhm.
a budget can be just like a scary thing. It's
Yeah.
like ignorance is bliss to some extent.
Yeah.
I'm not bankrupt, and I'm not, I'm not in the red. And so when I look at my budget, I can get kind of nervous,
Mhm.
freaked out, overwhelmed. Do you have any kind of encouragement for people who maybe are just feeling overwhelmed right now, thinking about like, where all my money's going? Maybe ends aren't connecting, or
Mhm.
it just feels a little bit tighter than what I thought it was. Do you have any sort of encouragement for that?
Yeah. So I would say two things to someone feeling that. I would say one, I think most people have probably been there at least at one point in their life. So you remember the statistics at the start of this? Like the state of the average American's finances is generally pretty bad. That's not an excuse, but that's to say if you're feeling that way, you're not alone. I would also say to that too, that I've walked through a few people. Brent, who's been doing this a lot more than I have, has walked through with a lot of people. Our MCs in general, without involving the finance team, have walked a lot of people through this. Like there are a lot of success stories out there of going from some pretty bad situations to working it out. It will take time, it will take effort, but we do see people that have worked through it and really come out in a good place. So I want to encourage you there that really no matter how dark your situation may seem right now, there is a light if you start working on it and progress towards it. And if you need people to connect to on that, I think Samurai can probably help you too with who would be someone good to talk to, whether that's me and the finance team or someone specifically in an MC or a small group to start because it's not just knowing the things, it's the emotional, the psychological aspects of that to connect you with. So, cool. Yeah. Yep, question. Yeah. Mm-hmm.
Do you suggest that we put that towards debt or put it in savings? What are the
Yep.
benefits?
Let me come back to that. We'll talk to debt a little bit. I will, if I don't remember, be sure to ask me again. But let me talk about how we make that decision. So maybe that's a good segue into the next section here. So let's talk a little bit about debt, and let's just think about debt overall. What makes debt good, a wise decision to take on debt versus bad debt or a bad decision to take on debt? And Sam, I didn't have this in here. Sam did talk about it, but we do see a biblical case for debt is okay. The Bible doesn't say that debt is forbidden, but it does give us a lot of caution about debt. So good debt is really, I would define it as a wise investment in the future. So I'm taking on debt now, and it's going to pay off as rewards in my future. So I think of there a reasonable mortgage for your house. I don't think there's anything wrong with taking out a mortgage when you purchase a home, but it needs to be reasonable, right? If you're making $50,000 a year and you're buying a $300,000 house, something's wrong, okay? So it needs to be a mortgage that you can handle and you can pay off. Sensible student loans, and I put for a useful education, right? So part of our culture, I think, has become an overvalue of prestigious education in schools. I don't want to go too far down there, but just to think about what do you really need for an education? What makes sense? And am I getting something worthwhile out of it? Yeah, Sam. Certainly can be. It depends on how much you toot your own horn, but had to have a dad joke in there, right? But no, I mean, there is value in pursuing our hobbies, and there is value in pursuing music, there is value in pursuing the arts. There is tremendous value in arts. But we need to weigh that with the debt we're taking on, and do we have a plan to pay it off? So that's something I would be thinking about there is, right? It's fine to go pursue those activities. My wife is an art major, right? I support things like that, but we need to know that I can pay it off. So really, if I'm taking on that student loan, do I have a plan to be able to pay it off? And particularly for some of those areas, a plan if becoming a recording artist traveling the country doesn't work out, what's my plan to pay it off? So that's what I mean there as well. And I would also add here a reasonable interest rate in good debt. So good debt is not high interest debt. So today, interest rates are historically low. We're at some of the lowest interest rates in history. Something like 5%, I'm just throwing something out there. If you're much above 5%, I would start to question, maybe we need to think of refinancing that debt, or maybe it falls more in the next category, which is bad debt. So bad debt is things that are debts that's taken on for wants, not needs. It's debt that's taken on for things that don't last. So it's also debt that's at very high interest rates. So credit cards, right? Credit cards today, you might be paying 15 to 20% on your debt. That is, a big waste of money, paying all that interest, and it's going to really hurt your budget as you try to pay that off. So we don't want to take on high interest debt. And also, like I talked about earlier, on wants versus needs, right? So this is where we need to maybe push a little bit on some of our culture too of, right, is a car good debt or bad debt if I'm taking on a car payment? I think that depends on where you're at and what kind of car you're talking about. If you have to have a car, that's our culture, to get around, that's our way of life. Do you need a new car? I don't think so. I don't think there's much of an argument for a new car, I mean brand new, but reasonable used car. If you're in a situation where you need a car, that can be something that's worthwhile taking debt on, but it's something we need to balance there. Other bad debt, payday loans. So this is unsecured loans. You're going to a payday lender, or title loans where you're putting up the title of your car. These are very high interest debts. These are often even more interest than credit cards. They're scary things. We don't want to be in that area. I wouldn't take out debt for furniture. Furniture is really not something that's worth it. It's not good debt to take on. You're just kind of digging yourself a hole there by indulging in some wants that aren't on your budget. Now, all those things, cars, furniture, those can be things that are worthwhile to spend your money on still, but they shouldn't be spent on by debt unless you're really, in a situation where, you have to have a car, you got to get to your job. Then it may make sense. But those are some things when we talk about good debt versus bad debt. I would also add here, if you're thinking about a major purchase that you would take on debt and you're struggling to know what makes sense, bring someone in, right? Talk to a family member, talk to an MC, talk to me, your finance team. It's easier to weigh these decisions, to think through them carefully before you take on the debt than to have that conversation of how do we pay this off now. Sam, did you have something?
Well, yeah, I was just thinking that so often like our spending is emotionally driven.
Yeah. Mm-hmm.
So even like pulling somebody into the conversation as a way of diffusing the heat of the emotion.
Yeah.
That can actually allow you to enter into the conversation because it's wise. I was just thinking like even on the finance team, we talked
Mm-hmm.
about these two questions of differentiating priorities from can we,
Yeah.
should we?
Yep.
Those two questions of can we being is it even within our means
Yeah.
to make this happen? And should we be more of a question of, hey, is this even if we can, is this a wise use
Yep.
of money?
No, that's a good point too. Of there is a difference, especially as you start to get things under control, between we can afford a Mercedes versus we should, right? Throwing that out there some, but yeah. So another thing here, right? The Bible talks about the wicked borrows but does not pay back. It's important as we think about debt, we need to have the intention of repaying that, a plan to repay that debt. That's part of wise and biblical financial planning as well. So if we're taking on debt, that's some added responsibility there is we have to repay that. And here too, it's contrast with the righteous is generous and gives. So thinking about how debt affects my relationship with God and affects our generosity too, our ability to give generous. Taking on a lot of debt can be a sign that you're not trusting for God to provide for you. It can also be a sign that where is your heart, really? Because it will impact your ability to serve God if you start to get in that bad debt, because you won't have the freedom for generosity, but you also, right, people who are deep into debt often are very burdened, right? It's a burden to carry that around. So that's not something we want to be in. So if you are in a situation where you have bad debt, what do you do? So bad debt, again, high interest, wants versus needs, things like that, credit cards. We want to pay that off really as quickly as we can. Your mortgage, good debt, things like that, that's a different conversation. That's more of a trade-off between investing and investing that money, saving that money versus paying off debt. We'll maybe get to that a little later. But if you have high interest debt, stimulus check, right? Stimulus check is a great thing to use for that. Pay off a credit card, whatever that looks like. There are two real methods that get talked about in paying off high interest or bad debt. One's called the Debt Snowball. This comes from Dave Ramsey. The idea here is write down all of your debts, focus on your budget of setting aside money to pay off debt, and just put all of that money towards the smallest debt. Whatever debt, it could be $500 that you owe your parents. It could be the smallest credit card that you have. We want to pay that off first, and then we roll the money we were putting to that into the next highest level of debt, pay that off, and then we roll the payment into the next one. So we start to build this snowball where we're able to put more and more money towards paying off each debt and get ourselves out. This is really a method that focuses on behavior change. So this is about finding that small debt, getting an early win, being able to cross that off the list, giving yourself some reward, crossing that off, and it can help with behavior change because you see progress. This also works pretty good when all of the debt you're trying to pay off is kind of at the same interest rate. This could all be bad interest rates, but it's kind of at the same. The debt avalanche is an approach where you've got maybe a variety of different interest rates. So the avalanche is similar idea, but instead of paying off the smallest debt, you pay off the debt with the highest interest rate first. So your credit card that's at 25%, pay that off before you pay off the one that's at 20. This focuses on saving money by reducing the cost of interest paid, but it doesn't necessarily give you that feeling of early wins. So two strategies to think about. Really, with either of these, I'd say just pick one and focus on executing it if you're in this situation. So if you're in that situation and needing to pay off bad debt too, really scrutinize your budget. Like I've talked about, what do you truly need? I think we tend to overestimate our needs sometimes. You may need to think about, how do I raise cash, right? Do I have a car that's maybe worth quite a bit and it's more than I need right now? Would it be wise, not saying you should do this, but it's worth thinking about, would it be wise to sell that car, buy a cheaper, lower cost car, maybe a clunker that just kind of gets you around, but then use some of that money to pay off the debt? You can think about other things like that, but just throwing that out there. Stick to your budget. Cash envelope method may help here too. So that's what I have on debt. Any questions about debt management there before we talk about savings? Okay. Sounds good. Oh, yep, go ahead. If it's the high interest, the bad debt, I would. If we're talking about a debt where it's maybe under 5%, like a mortgage, sometimes you'll get car payments in that range, then I think we need to kind of have a little more of a weighing of, is it better to pay that off versus investing it in a retirement account or something like that, or an emergency fund. And so because the interest rate on that debt is low enough that it's not really costing us a lot to have it. We might be able to get a little more gains in investing in retirement. We might also be in a situation where we want to save some of that for an emergency. because it may be harder to raise cash in the future. We are in a situation here, I don't have much in here about the current economic situation, but it's very likely with the stimulus check, with us starting to come out of COVID, that interest rates are going to go up in the future, and inflation is going to go up in the future. So I would expect that interest rates will start to raise over the next year or so too. So that's another thing to think about. Yeah, Ash. We'll get there. So yeah, we're going on into investing. So debt. Oh, sorry. So a mortgage now, if you have good credit, I don't have anything in here about credit. That was something we didn't have time for. But if you have good credit, you're probably talking in the 3 to 4% interest rate. Similar for car loans, good credit, not talking about all the 0% interest offers, but just like I'm going to buy a used car. There you're probably talking more like 4 or 5% interest rates would be typical.
Credit card's typically like 15.
Yeah, credit card today would be like 15, maybe 20, maybe even 25. There's a pretty high interest there, and interest rate, I don't. Maybe I should just explain this. When I say 15%, that means that's the per year interest. So if you have $1,000 every year on a credit card at 15% interest, you would pay $150 just in interest. That would not take that balance down. So, yeah. Cool. Yeah, go ahead. Sure. Yeah. So, good question on refinancing, because we're in a time where that often makes sense. So two things on refinancing. One, it does cost you something to refinance. There's going to be a fee to do that. Usually the rule of thumb in refinancing for a mortgage, I'm not so familiar about car loans, but for a mortgage is you want to save at least 1% in interest. So 1% reduction in interest rate, and you need to, for a mortgage, be planning on still living in that house for 3 to 5 years still to have it make sense. Mortgage refinancing, we just refinanced ours a few months ago. It's going to cost $1,500, $2,000 to do that refinancing. So you have to have enough time and interest rate savings to make it worth it. Car loans, I'm not so familiar with, but I think that maybe a little more % interest rate savings and still some time left is something to consider. Yeah, go ahead. Yeah.
Have a large amount of medical debt, and I know that's there's no interest on that.
Okay.
So what do you suggest with like that? Do you just like chip away at it as long as you can, or like what is your kind?
I really don't know much about how that works, if I'm honest. I'm not that familiar with it. If there's not interest on it and a set time, I would just kind of chip away at it, because since you're not charging anything in interest, there's not really a strong motivation to get that paid off sooner. But maybe that's something I can look into more, we can talk about more. I'm not that familiar with medical debt.
The debt avalanche that you're talking about?
Yeah.
So if it's low interest or no interest, then you want to chip away at the higher interest ones.
Yep.
But going back to that proverb, or was it Psalm 37, like the intent of the righteous is to pay back.
Yeah.
And so as you chip, like it's not like, oh, it's 0 interest, so I can just put it off for a lifetime and eventually
Yeah.
like have the intention of, hey, we want, like it's part of a moral responsibility to chip away at.
Yep.
So thinking through what makes the most sense for my family personally to like knock away the highest interest rate, because in doing so, you think down the road a little bit, because it'll accumulate more money.
Yeah.
So you kind of knock that stuff out.
Yep.
And also say, hey, my moral responsibility is to pay this, so it's not just something
Yeah.
at the bottom of the list
Yep.
and forget about it. But it is kind of in a sense at the bottom of the list. We'll get there.
Yeah. Good way to put that, Sam. That's good. Yeah. Yeah. So I would say the same thing. Yep,
No, it's not.
it's froze. Oh. Yeah, and that's where when we start talking about the next section here in savings, before we start paying off those like student loan interest rate frozen, very low interest rate debt, we want to put ourselves in a good position for saving.